From Daily Forex, this is Chris taking a look at the US dollar against the Canadian dollar. The US dollar initially rallied a bit during the trading session here on Thursday, but then fell pretty hard as we continued to see a lot of noisy and negative trading. That being said, this is a market that's been in a negative trend for quite some time. And with that being said, I think we have to look at this as a market that anytime we rally, we should see some type of exhaustion that we can get involved with. However, we are approaching the 1.35 level, and that, of course, is an area that a lot of people will be paying close attention to. It is a large, round, psychologically significant figure, and it's right in the middle of the cluster that we had traded in for two excruciating years. This is a market that quite often does nothing, and quite frankly, that's more the common action in this market than anything else. We don't get big moves very often. When we do, they tend to be grinding like we've seen on the way up and on the way down. I think that continues to be the way going forward. And with this, we'll be paying close attention to that area between 1.35 and 1.34. The interest rate differential does favor the US dollar, at least for now. And people now are trying to sell the US dollar on hopes that the Federal Reserve is going to come out and cut. The problem, of course, is various Federal Reserve speakers aren't willing to admit that yet. It wasn't a big day in this pair, and not a huge surprise considering that it is Independence Day on Friday, and that, of course, will have a major influence on liquidity, especially in this pair, because as a general rule, it is mainly traded in the North American part of the world, and with the Americans gone, that obviously affects things. That being said, though, it looks like a fade the rally type of situation.